You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means our broadcast week has commenced here on the Options Insider Radio Network. It's Monday. It's noon Central, 1 p.m. Eastern Time for the old, what the cool kids call the OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. Hope you guys are staying safe, staying sane out there. If you like what you hear, make sure you keep those reviews coming so new folks can continue to discover the network in these times of trial and turbulence out there. And, of course, keep those questions coming. We do indeed love to hear from you guys. Despite what the Rock Lobster says, we like to hear from you guys. And joining me on the program today, since I gave him a hard time, of course, we got the aforementioned rockingest of lobsters, a.k.a. Mr. Andrew Giovinazzi from OptionPit.com by way of the old KC, a.k.a. Carmen Line, or KLC, really. KLC, how's that? Is that what the cool kids are calling it, Mr. Rock Lobster, KLC?
I believe all the cool kids call it that. Every kid that is cool currently, that's what they call it.
Because, they're all discussing the latest state of volatility capital. That's what the cool kids are talking about.
Well, now that Maine is no longer the option capital of the world on Google, we've fallen, back to 6th, 7th, 8th place, something like that. Terrible, just terrible.
Yeah, hard times in Maine, I hear. Depression is on the rise, having lost their lone claim to national prominence. Dark times, so Maine listeners, rally around us today. We'll see if we can make you feel a little better. And also joining us from a place where they always feel good, it's St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well.
Always happy to be here. Every day's a holiday. Every meal is a feast.
You're about to say every holiday. I was like, oh, is today a holiday I missed out on it? Is it some remote holiday in some rare neck of the woods? Nope, it's just time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the portion of the show where we break down what the heck is trading, what is lighting up our collective tapes here to kick off the trading week. And yet another week where it seems like the market is back to the old whistling past the graveyard mode again. Pay no attention to that coronavirus around the corner. We got some good data. So that seems to be what's given the markets a boost today. Most of the major indices coming into showtime firmly in the green. The S&P, once again, the Goldilocks of the bunch, up about 1.1%. The NASDAQ up, actually the laggard today, up only 0.9%. Can't even manage a full percent. How dare it? And the Dow up nearly 2%, 1.75%. So good day out there across all of the major indices. Gold up slightly, crude threatening the 40 handle again out in WTI land, 39.5, up 2.6%, or about a handle out there, despite the fact names like Chesapeake we talked about before getting out there and declaring bankruptcy over the weekend out there. So a lot of interesting developments out there. Interesting developments in the vol space as well. Our old friend VIX Cash giving back a little bit of the juice it got last week. It's down to, was at the start of the showtime about 33.5. It's down to almost 33 even. That puts it down about 1.25 handles from where it was this time last show. Our old friend VVIX, aka the vol of vol, at about a 125.5. That puts it down not quite 10 handles, about 9.25 handles from where it was last show. And VXX coming into showtime was at about 36.5. Puts it down slightly, down about a quarter. Again, until we see all this froth and turbulence get squeezed out of the front portion of that VIX futures curve, which could be happening. We do have a truncated holiday week, remember, listeners here as well. Then maybe it's going to be hard to see a lot of aggressive erosion. But again, you see VIX futures return to normal. We may see VXX start doing that old slide-a-roo trade, as the rock lobster call. That's his technical term for it out there. Of course, I was joking about the good data earlier. That pretty much most of this rally coming on the heels of this strong housing data. We saw the National Association of Realtors saying pending home sales in May spiking 44.3%. Now, that's not compared to a year ago like you might think as compared to April. So obviously April was a terrible moment for pretty much any aspect of the economy. And so a good, strong increase from them. They had expected a 15% gain, so that bit of strong housing data giving the market a bit of a boost, of course. Sales still down, about 5.1% lower. Now, that's compared to last year. For some reason, they compare sales data to last year and the sales data to last year and yet pending sales to last month. Not sure why that is, but c'est la vie. That's how the data is parsed. And that's not enough for you. Also, the folks over in Gilead announcing the pricing for their remdesivir drug, in case you're wondering what's going to cost you out of pocket to get this, I guess, treatment. I mean, it's kind of dicey. The data is not really saying, hey, it's a slam dunk. You're having a bad case of the Rona, then take a shot of remdesivir and all will be right with the world. It's far from that, yet they're going to charge over $3,000 for it. $3,120 to be precise. That's your out-of-pocket price. Insurance will obviously cut that down a little bit, but folks, I think to say a wee bit outraged at that, we've got the head of the Cleveland Clinic saying it's a high price for a drug that has not been shown to reduce mortality, and also he'd like to see it developed for free or distributed for free because it was developed using significant taxpayer funding. We've got another consumer group, Public Citizen, calls it an outrage. This drug has received over $70 million in public funding. Of course, Gilead says they spent $1 billion, or they will have spent $1 billion by the time it gets to the end of the year developing and making this thing. So kind of a he said, she said story out there. And they also say that price will support distribution throughout the rest of the world, not just here in the U.S. But still, folks, a little bit up in arms. Let's start with Uncle Mike, because Uncle Mike, you never or missed an opportunity, I should say, to get up in arms about drug pricing. That's been your rant of choice on the show over the years. What are your thoughts, A, on what we're seeing in the markets, and then B, does this whole remdesivir thing, does it get your knickers in a twist, sir?
I don't know, because ultimately I could see the government stepping in and supplementing this in some type of way. So in terms of are my knickers in a twist, don't know yet. Reserving judgment on that one at this time. In terms of, is it right? If they're doing this just to cut a fat hog in the butt to try and make money off of saving people's lives just for that reason, I don't have a problem with people making money. I'm a capitalist myself. But if there's, I'm very much of the school of thought that if they can save if this price is going to ultimately prevent loss of life, or if this price is ultimately going to stop people from getting the drug in some way, shape, or form, and they do nothing to help that, then my knickers will be in a bunch. But if this is the way for them to make money and it works, I have no problem with it whatsoever, because I don't care how poor I am. If I need this drug to live, I'm going to find the $3,000 somehow, some way. So I don't know if my knickers are in a bunch yet or not.
That's way too reasonable of an approach, sir. I expected you to get all hot and bothered about this. But aside from remdesivir, which I was just trying to push your buttons a little bit there, what else is lighting up your tape in this? Mostly Uncle Mike kind of day.
Oh, I'm thoroughly ticked off, Mark, and everything.
Oh, that's better. Now I'm getting what I paid for here.
There we go. I think the big thing that I'm seeing today is that 3,000. Although we did dip a little bit below it in the S&P, I believe our low is 29.99 in the SPX. 3,000 is a pretty tough nut to crack, and it cracked for a little bit earlier this morning, but for the most part, the rest of the day we have been above it. And so the market was not looking too pretty at the open, but 3,000 has held, and I think it'll be interesting to see if it can continue to hold. This is going to be a very fun last couple hours of the day to watch today. So that's one thing that's lighting up my tape. And then just the other thing, I don't know how much it'll really affect markets, but I think it could be kind of a sign of things. It's that a lot of, like Division I college football programs are being sent home now. They would go back, and I think it was Clemson was one of them, and no player was positive for COVID when they got there. But then 2 weeks later, after working out, 14 players tested positive. And so we're getting some smaller schools that are just canceling football right now. And so I'm noticing that a lot of those things are happening, and that it looked like in early June, hey, we're going to be having fall sports, and things are looking good for that. But now it seems like we're back to 50-50 on it. It would be kind of the Uncle Mike indicator of fall sports at this point. Now, obviously, I hope we do, but we are getting to that stage. And if that happens, it's going to be interesting to see how that affects the economy. Not that football is the staple of the economy by any means, but I think it could have kind of a domino effect from the standpoint that if we're not getting together for large sporting events and they're just not going to have sports, that if that happens, then what's to stop us from not allowing us to have more gatherings in public places for restaurants? And we might go right back to where we were a couple months ago. I don't think we will, but that is something that's a little bit of a concern to me at this point in time. Of course, I want everybody to be safe, but I did not major in economics in college. I majored in general business, but in the general rules of aggregate supply and aggregate demand, if nobody spends any money, nobody can really make any money. And if no one's out, it does make it difficult for small business to survive. So those are some things with which I'm concerned. But overall, I think that with markets, if we are able to go back to as we were, or at least some semblance of as we were a few months back before the COVID stuff started, I'm very bullish on our markets and our economy. In Illinois, phase 4 started on Friday, and so things are opening up, but we still have the capacity rules and we still have a lot of things happening now. But if we do get to have our lives back, then, and without the fear and risk of COVID, then I'm very bullish on this market because of the fact that we don't have interest rates anymore. We have cheap energy prices, and we have trillions of dollars of government stimulus within the economy. So that's kind of what I'm looking at right now. And that is, I'm sorry, I'm not more pissed off. I'll try to be next time.
You mentioned football getting canceled. I kind of buried another big lead at the top there, too. Broadway is canceled. If you are intrigued by such things or hoping to maybe head to the Big Apple to catch a show, it's done for the rest of 2020. Yet another victim of this spiraling pandemic outbreak here. So home sales good. Football maybe dicey. Broadway off the lineup there if you were trying to plan the rest of your 2020 out here. Mr. Rocklops, I know you were planning to hit a bunch of shows, so you must be really upset about this news. And then also, just to reference last show, how goes your lobstering?
Well, I have yet to put a trap in, really. So I look at it, fishing, a lot of trying, no catching. Clams are easy, but the clam pirates leave trails for me to follow. So all those kind of things are not difficult. So life is still pretty good in, my quarantine universe anyway. But I would echo, so from a vol point of view, a couple weeks ago, I was just looking at, where we were when things, let's say, where there was some kind of, let's say, the rose-colored glasses, the happy scenario. And hard to believe, but VIX was 24.65, which is, 8.5, 9 points below where it is today relative. And we had quite a shock up to the mid-40s. Then all of a sudden, I think what TOSAW just said, all of a sudden reopening too fast or this or that, or we have cases up. I think part of this whole reopening process anyway, some states are doing it differently. You're going to see what works and how bad it might get. Better maybe just a couple of states trying to figure it out than maybe the whole country trying to figure it out all at once. So I think at this point the market is the jury is kind of out. So we're certainly not 3,400 anymore. We're not 3,200, which I thought was mostly big tech. And now this 3,000 level, we're kind of sitting around and just basically, I think there's a point now where we have to see what happens. We need, at least I think, we need a couple of weeks, right? Because we had this surge in cases, depending on what news source you look at, it's where the surge is coming from and how bad it is. I can't really find out that information yet. I figure I know it's bad if they have to start reopening the field hospitals again. That's kind of my badness indicator. Like, oh wow, that I would see. I wouldn't be surprised if the SPX was down maybe 200 points, something like that, if that news started to come out. Because I think other states would kind of make sure they keep the brakes on. Reopening. So that's, I would say, the gloomy scenario. The other scenario is the market just kind of sits around here for a while until we figure it out. I think large sporting events, since they haven't, figured that out, people kind of can't wear masks. What are they going to do? Open them up for, 50% capacity? I don't know, 25% capacity? I'm not really sure how that would work. But maybe, but I don't think there's any consensus on that yet. Certainly, probably everybody would have to wear a mask, and then people are mad about wearing masks, and who knows? Or does everybody need to get their temperature taken before you go? Like they're doing in China or Hong Kong or something like that. So I think the reality is that the virus is not going away. Is it the Black Death? No, but it's certainly dangerous. But it's lingering enough to slow down a lot of normal activity. And I'm not sure we've crossed the bridge of just having to figure out how to deal with some inconvenience in order to get moving. I think there's still sort of the all or none where we either have to stay in or, I'm just going to do what I want. I'm not worried about the virus. And, I think we're going to have to have some sort of compromise to get things to go forward a little bit. So at least for right now, you have the S&P 500 here, and it's kind of we don't know what's going to happen sort of routine. So VIX, I think VIX can have a fairly wide range. The more the market kind of settles a little bit, it's going to be hard for vol to go higher than it is right now. But like I said, the first time one of those field hospitals reopens in like a Phoenix or a Houston or something like that, I think you could see a wicked spike in volatility. Of course, I hope that doesn't happen because that's not the best scenario just for us, the whole country moving forward. But, I think we're in this range of higher vol. And I thought, VIX would get to out of zone 4 when you could get a haircut. And we basically touched that, right? When you could get a haircut, we were trading like a 25 VIX. And we've since bounced off of that. Now, I don't think they're closing the hair salons yet because that doesn't seem to be a massive outbreak point. But I think like going to bars and stuff like that, I think people are going to have to wear masks if they want to go. That's a wild guess to try to, to get things moving along. So I don't know how much fun that's going to be for going to a bar. But anyway, I think there's, like TOSAW says with the football, there's still a lot of issue of these large events. And I don't think the CDC or anybody else has really worked that out on how they want to manage it yet. So, until that kind of thing happens, I think we still have this. I think we're still just going to have a volatile market, and that's sort of the range to me is, the mid 20s for VIX and possibly higher than the mid 40s, as high as 50 or higher. If you see kind of the worst case scenario where, like a city, all of a sudden they feel like it's getting overwhelmed or something and they can't deal. So, and I think any day that news could break. And I think that's why we're seeing vol the way it is.
Interesting times indeed. Yeah, you're right. We haven't hit that level yet where places like Chicago with McCormick Place getting, reopened as these emergency bastions of medical treatment. Hopefully we don't see that again. You're right, because that would certainly be a shock to the system. Let's see what today is moving. By the way, Gilead was up earlier on the day on this pricing news. They're up to about a 76.5. Seems like they're giving most of that back now. They're actually down the day now, down about 74.5. So giving back all that premium, as it seems like some of the backlash has come back on them again. But of course, they're still up. Let's see how the markets are trending right now. VIX at about 250,000 contracts as of a few minutes ago. So a decent day given the fact that the ADV is still pretty light out there, even though it has ticked up since our last show. It's up to just 1,000 contracts over 400K. It's at 401 right now. It was in the 300K firmly not too long ago. SPY at about 2.7 million contracts as of a few minutes ago. That ADV is about 5.6, almost 5.7 million out there. So SPY staying robust. The S, 643,000 contracts, a little bit north of halfway to their ADV, which is about 1.2 million. So the S ADV is kind of staying firm, I guess you can say. It's not really ticking up yet. Everyone's waiting. The floor is back. What's it going to mean for S paper? So far, not a heck of a lot, but we'll see. Again, these are kind of strange times we're in as well, so that's always obviously playing a big role in what kind of paper flow we're seeing out there. The Qs, just a tick under 500K as of a little bit ago. The ADV, almost 1 million, 950,000 contracts out there. So pretty robust paper in the Qs, and IWM coming hot off the heels of their big recon last week at about 300K. The ADV, almost 700,000 contracts out there as well. If you've been watching small caps, they've been rocking and rolling of late. Speaking of small caps, let's head on out to our most active top 10 movers and shakers out there in the single name options land today. Interesting names out here, including a newcomer here at number 10. Cost you $140 to break into the top 10 today, listeners, which is decent paper, actually. We've seen days where it's under 100K out there. So decent paper out there, all things considered. And number 10 gets you all the way to Workhorse Group. If you're not familiar with it, don't feel bad. I wasn't either until I saw their name on the list here. This is an American manufacturing company based in Cincinnati, Ohio, currently focused on manufacturing electrically powered delivery and utility vehicles. Ticker symbol Workhorse, WKHS. Trading today, get this, they were up $5.50. They're at $15.34, so up about 55% today. What the heck is powering this madness, you might say? Well, I guess they announced, or a subsidiary of theirs that they own a piece of, announced looks like a electric pickup, I believe it is today. So that's driving a lot of the top 10 actually. A lot of the top 10 is based around electric vehicles today. Spoiler. But not perhaps the one you might think at the top, though, which is kind of interesting. A bit of a topsy-turvy top 10 out here, to say the least. So Workhorse number 10, 140,000 contracts. If you're wondering for this name that you've probably never heard of, what kind of options paper do they do? ADV is about 19,000 contracts out there. So they're firmly beyond that at this point. And, yeah, not a lot really lighting it up out there overall from a net paper perspective. People are liking it today, though. Big prints out there. July 10 puts. It's at a $14.90. Someone's gobbling up through the offer for $1,500 of these July 10 puts. So maybe and more of these July 10 puts going up today. Let's see how many total of these bad boys have traded today. Yeah, July 10 puts, nearly 20,000. So someone may be fading this rally. Either way, about 20,000 of these July 10 puts have gone up so far today. So that's of our 140,000, 20,000 July 10 put strike. Interesting stuff. Number 9, a name you may have heard of. Microsoft, 141,000. Number 8, back to electric vehicles. Nikola, another name that's been kind of lighting up the electric trucking and shipping area of late. Everyone's got the freaking Tesla branding in some capacity. Nikola Tesla, who knew? Century plus after his death, he'd be such a hot branding commodity. 148,000 contracts over there for Nikola. Number 7, Bank of America, $157. Number 6, Tesla, all the way down at number 6. How dare they owe the humanity at an even 200,000 contracts. So nowhere near the top 2, let alone the top 5 out there today. Number 5, American Airlines, back in the airline category, 215,000 contracts. Number 4, AMD, kind of a perpetual top 10er, back at number 4. They're about a little north of 250,000, about 257,000 contracts. Number 3, our friends across the street, somehow divorced from their Bank of America symbol cousins there. It's Boeing, 300K even for number 3. Number 2, Apple, 401K. That means who the heck's number 1? It's not Tesla, it's not Apple. Who the heck could be dominating the top 10 most active movers and shakers out there today? Well, it's another name you guys have heard of, Facebook. Facebook lighting it up today to the tune of 492,000 contracts. Big paper out there, big move as well. Not as big as Workhorse, but a decent move for a $220 stock. It's at about $219.5 right now, about $3.50 or about 1.6%. Of course, they're talking about making some changes as a result of what's going on out there with the social commentary and the elections and things like that. Some folks thought it was going to really hurt their business model. Maybe this recent move saying not so much. Either way, options hot and heavy out there in Facebook land. Let's take a peek really quickly and see what the dominant trades are out there in Facebook land today. It's the July 220s. I guess that makes sense because they're hovering at 219.60 now. 28,000 of those bad boys have gone up today. It looks like a pretty split between bid, mid, and ask. And then we've got the July 200 puts, 24,000 of those. If you had asked me what I thought would be there, I think at the money calls and slightly out of the money puts would probably be up there on my list. And that seems to be what we got lighting it up out there in Facebook land today. And since we're looking at what's lighting it up, let's keep on rolling. Let's unleash our Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we tell you what's lighting up. By the way, I kind of buried the lead there on Facebook. Not just up $3.50, but huge swing intraday here. Was trading about 10 handles lower just on the start of the day here at 209.5, now 219.5 out there. So a big move net out there in Facebook land, about 10 handles, which makes more sense. I was looking at this 1.5% move. I'm like, that's really enough to propel Facebook all the way to number 1, a spot that it hasn't really been in quite some time. And 10 handle swing, that could do. Let's see what else could do it out here with our Eye of Sauron. You like weird names you may not be familiar with? Maybe doing some electric and or alternative power systems? We got you covered here with our first name on the Odd Block. This is everyone's favorite, Ballard Power Systems, Inc. Ticker symbol BLDP, BLDP. This is a developer and manufacturer of proton exchange membrane fuel cells. Remember those? Don't get a lot of love on those anymore. Seems like every few years those are all the rage and they go away and then they're all the rage again. I've lost track of how many firms and startups have tilted at that windmill over the decades with middling results. Who knows? Maybe Ballard Power will be the one to break the trend. This name trading similar to the other name we were just talking about at about $15.50, up about 1.8 or about 13.25% out there. So good run for Ballard Power Systems today. A year ago, they were and also ran trading $4.03. Oh, how the many have become mighty over the past year. And it's kind of been a nice upward trajectory. It was a decent run already. And getting into the end of the year, they were already trading about $8, so they pretty much had doubled over the course of the year. So it was looking like a good year already. And then the year kicked off in earnest in January, they went from $8 on the 6th all the way to $12. It's another 50% rally on the 17th. So in 11 days, they rallied 50%. That's impressive. Then they gave most of that back down to $9 again in late January. So a turbulent month of January, apparently, for Ballard. And then right back up again, heading into the big sell-off, hit 14.14 on February, on Valentine's Day. Actually, no, a little bit later, 19th, actually, of February. And then you all know what happened after that. Sold off down to 8.5 again. Then it seemed like it tried to rally. Couldn't really maintain it. Sold off back again to $7 and change. Seemed like their low in the big sell-off was actually on April 1st, April Fool's Day, 7.25. Then they kind of slowly turned it around, got back up to $10 by May, and as of now, $15.50. Their high is actually $15.99. I wonder if they hit that intraday or not. I'm not sure. But either way, that's their high on the year. And that seems like it's right about, maybe they hit that earlier today. Let's just see where their high, where they topped. Yeah, they hit that today. So they hit $15.99, actually off their highs so far. But still a good day for Ballard Power Systems. Let's see what our Eye of Sauron has unleashed upon us here. The big print out there was about 2,364 of the AUG 18s going up, paper liking these bad boys, gobbling them up to the tune of 75 cents. They were half a buck at 75. There were 632 offered. Paper said, we'll take all those and a few thousand more. In fact, a total of about 10,000 of these bad boys have traded on the day. A lot of these on the SIBO. There are earnings. They're on July 29th, so exactly a month from now. But I don't think they're playing for earnings so much as they're playing to get a piece of this hot action out here in Ballard Power Systems. Mr. Rock Lobster, this is kind of an old school odd block name here, odd block trade. I kind of like it. We're getting a little bit of a tech name here, getting a little bit of love. People loading up for the upside on some near-term calls, swinging for the fences. What say you, sir, on this call palooza here in Ballard Power Systems?
This looks like everybody jumping on the next big thing train. Like, okay, they missed Tesla, they missed Nikola, they missed Beyond Meat, so now they're resurrecting this ancient cell, battery maker. Like, okay, this is it kind of reminds me of, I don't know, I'm dating myself, right? But a great TV show in the 70s was Sanford and Son, and then Fred Sanford, Red Fox, this is going to be the big one.
Are you going to say this is the big one? Are you going to say
this is the big one? And I think everybody that's already missed the big ones, the Nikola flying and Tesla flying and all that. And this one kind of has all the right stuff. So, battery cell battery, whatever, like fuel cells and I hope all this stuff works. I'm sure that's probably what the future is, but this is a company that's kind of yet to make the bucks, but they've been around. So maybe this is the next big one. Who knows? But this to me is like, we're just going to call them Red Fox calls. These are the next big one. These could be the next big one calls. And it could work out fine, but I think that's kind of what that paper looks like to me.
I like it. The Red Fox calls here. Feeling like you're missing out maybe? And you maybe, who knows, maybe even missed a train already on Workhorse. We shall see. But they hit both that one and Ballard trading about a similar level, about $15.50. So the horse not quite out of the barn yet, even though they are remarkably higher than where they were about a year ago out there. We're going to put that one in our to-be-watched category. Let's come back to this one, see how all this call flew. By the way, the July call is also active out there as well. So a lot of love for near-term upside here in Ballard. Let's see what else is on our Eye of Sauron out here. Let's go a little bit longer term this time. Forget July, forget August. We're going all the way out to Jan. To another name you're probably deeply familiar with. That's the fun of the Eye of Sauron. It finds the weird ones. This is Host Hotels and Resorts, Inc., ticker symbol HST. This is a REIT. Guessing they specialize maybe in hotels and resorts? Who knows? They're headquartered in Maryland, in case you're wondering. They're founded in 1927. Wow, this is an ancient REIT. Trading $11.01 out here, up about a quarter, about 2.5%. Let's see how this REIT has fared over the year. And as you've seen from the headlines, hasn't exactly been a good year on the REIT front. A year ago, it was trading trading 18.17 a year ago, so way north of where it is right now. And it kind of stayed at that level, as you expect a REIT to do, be kind of sleepy all the way up until, I don't know, looks like something happened in mid to late February on this chart. I can't really figure out what that was, but it took a strong turn to the dark side here. Sold off pretty quickly down to 9.30, and then it seems like it bottomed out over that period intraday at about 7.86, so pretty good drubbing out here. And they kind of have fought back a few times and then given it right back up. They topped out recently at about almost $15, $14.82, and that was back on June 8th, and they kind of gave that back up again now because they're back down to about $11 and change. So it's kind of been a rough period for them to try to maintain any sort of rally. The rest of the broad market or at least the big names in the broad market, have had that V-shaped recovery. Not so much for a lot of the REITs here, including our friend Host Hotels, even though it is off the low. It hit back in the nadir. Let's see what our Eye of Sauron found. And, yeah, given the fact that there's some weakness out here, this doesn't really surprise me. There's Jan Putlove to the tune of a couple of blocks of the Jan 9 puts going up, lifting the offer 2,360 times, almost exactly the same size as our Ballard Power ones. 2,360 times for $1.05. They were one even at 105, so surprisingly tight for longer-term puts in a name that isn't the most liquid. And then also saw another block of about 1,800 going up for $1.05 as well. Total of about 6,000 have gone up so far on the day as of a few minutes ago out here. So someone really liking themselves these 9 puts here in Host Hotels and Resorts. Mr. Rock Lobster, got kind of a couple of old school odd block trades here. We got Swinging for the Fences, near-term call love, and a hot name. And then we got a name that's seen a little bit of love, but maybe had some struggles as well, and is getting some size, longer-term downside put love. What say you about our HST Jan 9 put, sir?
I was looking at this one. This is one I kind of feel like, if you think hotels are going to bounce back, I would rather be selling these puts. I'm not really a hot buyer of these type of puts at this point. If you sold them, you might get better than 10% yield till January for 6 months. I don't know. It's just, they look kind of, they feel a little pricey to me, to be honest. And it's one of those things where this is an old hotel man, hotel owner. And I know they probably changed their stripes to REIT a couple of years ago or whatever. But, for the most part, pretty consistent type of company. And the low was like, what, $8 or something. So I don't think it's going bankrupt, but I don't, to me, that just feels like a lot of money to spend on those puts. I would rather use those to finance a long call at some point or something like that. It's just, I would guess they're buying puts and buying stock and looking for the pop back, because the dividend, they probably won't pay the same dividend this year. I believe it was like a 80-cent dividend a year. So you could use the divvy to buy the puts, stop yourself out and buy the stock. I don't think it's a terrible idea. I'm not sure, though. I was just looking to see if they're going to pay 20 cents again in June, which I doubt, given what was happening. But I would assume that the stock price is reflecting less of a dividend payout in the short term. So I would guess it's a put in stock play to buy the leverage on the upside. And if I was doing it, I would just sell the puts, and then, if we got any kind of rally, I'd start buying some junk calls or something.
The old Rock Lobster 1-2. Sell the puts and then buy the junk calls, as he likes. That should be the other title of your book. After you do Getting Your Juice for Free, Volume 2 could be Selling Junk Puts, or I should say Selling the Puts and then buying the junk calls. Does it sound like a catchy title? What do you think? I think it's a lovely title. We'll see if the publishers smile upon it. Let's see if we smile upon our final trade as well. We're going to go back in the Wayback Machine, Mr. Rock Lobster. So put your Wayback pants on, the bell bottoms for back in May when we were wearing those 70s styles again. They were hot and heavy back on May 18th. That's where we're going back, listeners, to some Capital One Financial. Looks like they were the Rock Lobster's favorite trade. Some line in the sand puts. At the time, we profiled 25,817 of the June 45 puts, going up 56 cents on the bid. So again, that was a pretty sizable chunk of puts out there. It seemed like someone was drawing a pretty aggressive line in the sand in Capital One, saying this far, no farther. And if it goes down that far, I'm going to buy myself some stock. And let's see how it worked out for them. Obviously, June now in the rear view mirror here, at least from an options perspective. The stock, when that trade went up, was at 63.40. And it seems like it never really threatened that 45 handle during the lifespan of these options. It almost got down to $60 a few times, and that was kind of really about it. So these puts seem like they were pretty, as you say in the floor, a good do, as they like to say. Stock closed on expiration $68.07, so 45 strike distant in the rear view mirror. Go figure, these puts were still open to the tune of about 29,000 on that strike at expiration. So our friend here didn't bother to close them out. He didn't follow our advice and take them off for a penny. He left them open all the way through, and they went out. So this our friend pocketed, in case you don't feel like doing the math, listeners, right around $1.4 million or so. Not bad for a few months worth of work, Mr. Rock Lobster. You got to tie up some capital, obviously, for these bad boys. What do you think? $1.4 million for a month and change. How does that look to you?
Don't we call these like Ferrari puts? and somebody just sells the puts so they can buy a Ferrari with
I prefer
money.
a Lambo, but if you want to go Ferrari, to each their own.
This is, a high net worth individual, maybe whacking out some puts and taking the COF at $34, which is looking pretty savvy at this point. So I'm just going to call these straight up Ferrari puts. They got themselves a nice new car, and it doesn't look too bad.
Pretty sweet car for $1.4 million. I can get a pretty sweet car for a lot less than that and still take, I don't know, a little north of $1 million, maybe $1.2 million home with me. Maybe I'd do that trade. Take a $250,000 car. How about that? And then keep the rest. I don't know. I don't know if I need to spend all $1.4 million, but hey, the Rock Lobster has expensive tastes. So it seems like, at least for this one, bit of a home run out there. As we head on into our next segment, it's Monday. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Uh-oh, it's Monday. Uncle Mike's coming, and I hear the flutter. Actually, of enormous wings. Enormous. I feel it's going to carry me away. Uncle Mike, that can mean only one thing. A, my little birdies are getting big, and B, they're whispering to me of condors. Are those rumors true, sir? Did my birdies, do they deserve their bird seat today, sir?
They do. They flew out of here quick when they saw those condors. Your birds are no match for them in terms of size.
That's true. They are little, but they're speedy. They make up for it in speed.
They do, absolutely. And intelligence, to say the least. So I want to talk today about the iron condor. And I know we have a lot of premium selling listeners out there. Excuse me. And with the condor right now, a lot of people might be looking to that saying, oh, well, the market's kind of been a little bit range bound between 300 and 320. And, maybe with the high volatility, why not sell some premium? And then on top of that, maybe if I sell a put spread, why not sell a call spread too? Because it doesn't take up any more margin in my maintenance in my account. So I can get double the premium. And I mean, what are the odds of the market moving this much anyway? Well, I want to offer some words of caution against the condor right now. I'm not saying I'm against it. I'm not in it, and I probably won't be in it anytime soon. But I want to just tell you some stories from my past in terms of in my old Options Express days. This was probably about maybe 13, 14 years ago. And I traveled the country, and I would show the Options Express website to Options Express retail clients. And I estimate during that time frame that I literally had around roughly 10,000 one-on-one conversations with people. And with that, well, maybe not that many, I don't know, quite a few. It sure seems like 10,000, but I would routinely talk to 300 people frequently when I would go to these events every week. So with that, with all the conversations that I had with people, I'll never forget maybe 2006, 2007, when the rage was just the good old iron condor. Everybody was doing the iron condor and making money hand over fist. That was the golden age of the iron condor. I would often, no matter what town I would go to, Dallas, San Francisco, Seattle, Florida, North Carolina, whatever, everyone was doing the condor. The condor was sweeping the nation. And the consistent conversation that I would have every time is people would say, yeah, you just do these 2 standard deviations out and you can make 8 to 9% a month doing this. And I mean, the odds are the market's not going to go that far. And it's just like printing money. And I would have that conversation week in, week out. And so my response would be along the lines of, and I had to be very agnostic, so to speak, just because I was working for a self-directed firm at the time. I would just say, okay, well, true. But of course, the risk is that one time that it doesn't, it can wipe out 8-9 months worth of profits for you. But what are the odds of that? And so I heard this for roughly 2 years. And then come 2008, when we had the financial crisis, the things that I would be hearing would be along the lines of how condors had wiped people out. And so what I want to caution our listeners with right now is that if you are going to do a condor, don't think of it as the end-all, be-all. This is the one strategy that makes money every time, because it doesn't. There's risk to it. You have to understand how to trade it and how to manage risk on it. The second thing I want to caution you on is don't become complacent on it. If you are doing this strategy of an iron condor and you are consistently making money, and you sell these short spreads very far out of the money on both the call side and the put side, and the odds are they're never going to get touched. If you're doing that, make sure that you have a plan for when it starts to go against you. Because when it does, you're going to get this feeling to where, the market's moving too much. And you're thinking, wait a minute, this is the reason that I quit buying call options, because I don't want this horrible feeling. Why is this happening? I don't want to lose on this trade. You're thinking, well, you know what? I still have another 6% to go before it touches my short strike price. Yeah, it looks kind of ugly right now, but here's the reality. Time is on my side. And when time runs out, I'm in good shape. I don't have to do anything. I'm just going to let it wait. And then you make yourself feel better for about a day or two. And then the market moves a little bit more against you. And you get this horrible feeling again. And then you have this same mental justification. I still have maybe 4% of a market move till it actually touches my short strike price. I'm fine, even though it looks a little bit ugly right now. And even though if I were to get out now, I would lose probably about 6 months worth of profits. But I'm not willing to do that because time's on my side. And almost all options that expire worthless go unassigned. And so I'm not going to worry about it. And then you continue to play that game. And then as the market becomes closer and closer to your short strike, whether it's to the call side or to the put side, you really get nervous about it. And you start thinking to yourself, why am I doing this? Why didn't I? This is why I got out of I thought this was a low risk trade. And this had an 85% probability of making profits. Why is this happening to me? It had an 85% chance. Those are great odds, and I'm smart because I went with the 85% probability. I'm conservative. I went with a conservative 85% chance of winning. Well, how come I'm losing? Well, if you're in that position, have the understanding that 85% does not mean 100%. And so oftentimes with those conversations that I had with people in the golden age of the iron condor was along the lines of people would say this has an 85% probability of making money, a 90% probability of making money. And they're right. But two things about that. 85 to 90% does not, I repeat, does not mean 100%. And if that's the case, then with that, you have to understand that if it's 90%, that means 1 out of 10 times you will lose. 90% does not mean 100. For some reason, people in the golden age of the iron condor thought that 85% meant 100%. It does not. Second thing that I want to emphasize on this is that if you're doing this, make sure that you understand of those 10 to 15% of the time that you lose, you're going to lose a lot more, most likely, than you make in the times with which you make. You're not just going to lose 1 month of profits. You're going to lose 7 or 8 months of profits. So with that, typically, if I ever trade a condor, I like to have risk management in place, which I'm really not much of a condor guy, but I like to have risk management in place to where I'm out of the trade before I get those horrible feelings in me. So that way, I won't have the 85 to 90% win ratio, but I'll live to trade another day. And that's something that I want to emphasize if you are going to go the route of the condor when you see all that high volatility in this marketplace. And that is the strategy for today. Last one for the first half of 2020.
Yeah, crazy. This year 2020 flying by. It's been such a dream for all. Let's see. The show's flying by as well. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, where we tell you what we're watching for the rest of this week until we can gather here together on Thursday. By the way, some more breaking news coming out of the global political front here. Iran apparently issuing an arrest warrant for Trump over that now long forgotten assassination, at least apparently not to Iran, but to the rest of the world. Other things have happened since that January day where we assassinated that Iranian general there on the airfield. Apparently Iran hasn't forgotten issuing an arrest warrant. The market's saying, We don't care. Everything's up even stronger since the start of the show. NASDAQ up 1.1%, S&P up about 1.3% now, and the Dow threatening 2%, 1.95% here coming into the end of the show. Let's go around the horn and see what everyone's watching. By the way, what we're watching, we had an interesting discussion. You guys probably heard it on Vol Views last week, kicked off by our buddy Mr. Shelley Brown there, the contentious debate of what's better, Philly cheesesteak or the old Italian, Chicago-style Italian beef out there. You have a poll running, ends in about an hour, so if you're listening live, you can still play along out there. Looks like Philly cheesesteak blowing the doors off Italian beef, about 62% to about 38% for Italian beef. I'm not a huge fan really of either. Can't really eat the former because lactose intolerant doesn't help, so I guess that means Italian beef has to win for me. Got to put peppers on it for me, though, otherwise it's kind of bland. But hey, our folks liking it. J4340 says, Whiz Wit. I guess he means cheese whiz, so I guess means he's voting for the Philly cheesesteak. I'm not really sure what that means, but it sounds like he's with the majority of you. If you're outraged, you got to get Italian beef in there in the category of the victors. Got about an hour or so to make it happen. Mr. Rocklops, let's go around the horn. We'll start with you. A, what is your preference, Italian beef or a Philly cheesesteak? And then B, what are you watching for the rest of this week until we gather back together on Thursday, sir?
That's actually quite a brutal choice, to be honest. That's like what was it? King Solomon or King David?
Yes.
Or Solomon.
Yes.
Rough choice. Damn. I actually, it's very tough. You know what? This is one of the great things about this country, though. When I'm in Chicago, I'm gonna have the beef, and when I'm in Philly, I'm gonna have the cheesesteak. So. I know that's not the answer you wanted.
When you're home, you have a lobster roll, right? And then all's happy.
Maybe you have a lobster roll. What's happening? I'm kind of with TOSAW here on seeing, the fits and starts out of this. I think, the recovery was, Congress kind of acted, the Fed acted for sure. It wasn't as dire as everybody thought. Market bounced back. And now we're like, well, how long do we have to live with this thing and how big of a problem is it going to be? And I think we're continuing to handicap that situation. And we'll see how it is. Now we've thrown, all of the polls in the presidency is a lot more up in the air than it was before. At least if you look at all the, in-bet stats and stuff. So who knows? And I think, again, this might be the year that we stay in the danger zone for the whole year. It is possible. And it's been quite a while. But this could be the first time that I can remember ever really that we spend, can we spend 6 months in zone 4? I don't know. That would be at least as big as a financial crisis. So we'll see. But I think we have this bad news in the press and then the ball comes back down a little bit, which usually means the news is not as bad as everybody thought. So as long as that trend continues, I can be, let's just say, cautiously bullish. Not hugely, but cautiously.
Got to fire up our old Kenny Loggins, licensing rights be damned, for the danger zone. Mr. Uncle Mike, same question for you. First off, the most pressing question of our day, Philly cheesesteak or Chicago-style Italian beef. Maybe you want to throw in a Skippy's Gyros there as well for your local food of choice. And then what is lighting up your tape until Thursday, sir?
I'm an offensive lineman for life, so my answer is both. I'm going to get one of each. But if I had a gun to my head and I couldn't talk the gunman out of allowing me to get both of them, I think I'd probably go with Andrew in Chicago, get an Italian beef, and in Philly, get a Philly cheesesteak. Because in reality, there's two facts there's one harsh fact of reality here. The further away you get from Philly, the worse it's going to taste. So if I'm in Chicago, why would I get a Philly thing if I'm in Chicago? And, just like in Chicago, the further away you get from Chicago, the worse pizza typically tastes, in my opinion. But we can take that on for another show. Now, with that being said, what am I watching right now? I think 3,000 is just a very key number right now. I'm going to be watching it today. I'm going to be staring at it all week. We do have the 4th of July holiday coming up, so it's likely that we're not going to have a lot of action in this marketplace, but I could see us just kind of holding right here just above the 3,000 level, but time will tell, that's for sure. So to answer what I'm watching, besides the news and everything, 3,000 is the key level for me in a real major way.
And, of course, delicious Philly cheesesteaks and or Italian beef. Get in there and vote if you haven't done so. It seems like Philly cheesesteaks may be pulling away even more as we speak. I guess digestive issues be damned. I probably go for a good Philly cheese. It tastes pretty good. I've never been a huge Italian beef guy. My wife will be mad at me for saying that. She's a Chicago girl. But c'est la vie. Story for another day. You have a local food product we should debate here on the show? Send it in, listeners. I blame Shelley for bringing that nugget to our attention on Vol Views last week. Unfortunately, listeners, that music means we're done, at least for this program. If you're saying, wait a minute, I need more. The week has just begun. Regale me with more options and volatility and derivatives-oriented information. Well, you're in luck. If you're listening live, you're going to get some fun stuff piped in there. Maybe a boot camp, maybe an option. Who knows what's going to be in there? All kinds of fun stuff. OPR. And then we'll be back in exactly half an hour with some fun guests to talk all things lighting it up on the vol, the volume, the open interest, the unusual activity side of the crypto fence. Should be pretty interesting on the crypto rundown, so stay tuned for that. If you're listening after the fact, like most of you are, just hit next on your device of choice and head on out into the wilderness. But before we do that, let's head on back to the land of Maine. Mr. Rock Lobster, sir, if folks are intrigued, they want to pick your brain about local delicacies, where should they go? What should they do?
Go to optionpit.com, go to our memberships tab, look at all our goodies. Our service, we have had students for years, 7, 8, 9 years. You think, they haven't learned anything, but they like hanging around because they like the ideas. And it helps them make money. So if you want to learn how to trade vol, learn something new, put some new stuff in your life, come on over to optionpit.com and we'll throw some learning at you.
They'll throw learning at you and maybe a lobster roll if you're lucky as well. Optionpit.com is the place to go. If you call him Uncle Mike, maybe he'll throw some Skippy's Euros at you. Uncle Mike, sir, if folks want such an offer, where should they go? What should they do?
stcharleswealth.com. Feel free to check out my website if you want to learn about a financial advisor who believes in watching the option market. Kind of a rarity out there. And I will give a special offer. If you become a new client this week, I will buy you dinner at Skippy's Euros.
Ooh, can I just send you $1 and get the Skippy's Euro deal? That's what I want. I want the Skippy's Euro, sir. Send me that hot action of local Skippy's Euros. Even though I live a block or two from Greektown, why get the authentic stuff when I can go all the way out to the suburbs for Skippy's Euros and delicious lemonade? Again, more free ads for them. Forget their ad. Head out to stcharleswealth.com. That's the ad that counts. And hit up Uncle Mike out there for fun, profit, and perhaps even some delicious Skippy's Euros. You never know. And on behalf of Uncle Mike and the rockingest of lobsters and myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, for voting in our fun and or silly polls. Keep all that coming. And we'll see you back here in about half an hour for Crypto Rundown. And then back right here again on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.